Good day, guys. It's such a pleasure to be able to speak with each and every one of you. We are so excited that you chose to check out our content. My name is Roderick. I am one of the traders here at Third Eye Traders, and in this video, we are going to show you how to plot perfect support and resistance zones, when to enter the trade, how to manage the trade, and when to exit the trade, while revealing the one trick that increased our trading account. Confused? Let's talk about it. Now guys, we're not going to spend the first part of this video going over things that traders do wrong. Instead, we're going to focus on the things that we do because we are firm believers what you focus on expands. So we're going to show you a step-by-step process and the things we look for so we can actually make money while trading. Before we do that and dive into the meat and reveal the trick that helped us increase our trading account, we're going to go over some basic definitions. What is support? In simple terms, support is a key level below price action. When price approaches this level, it rejects it and reverses in the opposite direction. Notice how price action rejected the support zone. What is resistance? In simple terms, resistance is a key level above price action. When price approaches this level, it rejects it and reverses in the opposite direction. Notice how price action respected this resistance zone. Until price action retested that level and broke above in the opposite direction. When it comes to support and resistance, we are always looking for multiple touches. We say this, it takes 2 to hire and 3 to fire. And what we mean by fire is to execute that trade. So as long as we see 2 connect points at a support zone or resistance zone, then we know that we are going to be ready to move in that position on the 3rd point. However, we do not execute trades based only on support and resistance zones. We only use these as guides. Now that we have covered the basic definitions of support and resistance, we're going to actually show you how to mark up support and resistance zones. Now, the first question we ask ourselves is, where's price traveling from? Now, this is important because it gives us a bias. Now, for those who are confused with what bias mean, let's go look up a definition. And it reads, a prejudice in favor of or against one thing. So what does that mean to us? That means that we're able to have a guide in where price action could potentially go. So you notice how price action was moving in a downward trend. Now price action has straightened up, which has given us many opportunities to be able to capitalize off of these trades by boxing in price action through the support and resistance zones. Keep in mind, this is the daily chart. We normally trade off the monthly and weekly time frame, and we use the daily time frame to actually enter into our positions. Here is a major key. When price action breaks above resistance, it becomes the new support. And when price action breaks below support, it becomes the new resistance. We hope now that you have a basic understanding of what support and resistance is. Next, we're going to go over our step-by-step guide and what we look for so you can start implementing this today. Brenda with the baby asks, I heard you mention zones. I use lines. Could you elaborate? You may be wondering, why not lines? The reason is simple. Lines are shallow and almost everyone draws them differently. This leads to inconsistencies that follows you through your trading journey. If you start off your basics, being inconsistent, you can take it to the bank. That is all downhill from there. Our only mission is to simplify this basic tool to help you become consistent. The only key to becoming a successful trader is to be consistent with your strategy. Now let's examine the 3 steps into placing a trade. Step number 1. We like to identify major areas where price action reacted to a key level, then reversing, whether price acted as resistance and became support or respecting the area altogether. We are able to identify these levels on higher time frames, such as on the monthly and weekly. Then we zoom down on the daily and hour 4 time frame for a precise entry. Now let's zoom down on the hour 4 chart. Now that we have zoomed down on the hour 4 chart, step number 2, we like to identify price action, exhaustion, and major areas rejection. We notice with exhaustion, price action tends to lose steam while approaching these levels. In simple terms, in most cases, candlesticks tend to become smaller and smaller to signal pure exhaustion. Then we look for candlesticks with long wick tails to show price action is rejected the major and support and resistance area. Is it safe to place a trade? No, not just yet. Step number 3, we need to see one of these candlestick patterns at a major support and resistance area. The first pattern is a bullish and or bearish engulfing candlestick. This tells us that the opposition has taken over the market and is ready to go. The second pattern is a railroad track. These candlesticks must be almost the same size. This is an immediate change in the trend. And the third pattern are one of the same that happens at both ends of the market. They are known as the morning and evening star pattern. The evening star occurs at the top of an uptrend, while the morning star occurs at the bottom of a downtrend. However, these are the only patterns we look for because they are most effective at major key areas such as support and resistance zones. If you guys are enjoying our content, be sure to hit the subscribe button and also the bell so you can get notifications every time we release a video. And also, if you have any questions or concerns, be sure to leave a comment below because we do our best in responding to each and every one of your comments. Now let's hypothetically say we missed all the confirmation checklists, right? Maybe it's because you're new, maybe you couldn't really spot it with a naked eye, right? You missed the major support and resistance zone, you missed price action showing you signs of exhaustion and rejection, and you missed the candlestick patterns. Well, the next tool we're going to show you is something we use just in case we missed all these confirmations to enter the position, to manage the position, and to exit the position just in case we missed the exit of the price action showing us signs of exhaustion and rejection. Now what we do is we take a trend zone and we mark it from the support zone to the resistance zone. Now our goal is to catch the move that is in play now. So hypothetically, we're not in this trade yet. So what we're doing is we're seeing price action respecting this trend zone. Now notice how price action was respecting this trend zone on its way back to resistance. Now, this is where it gets special. Let's just say hypothetically, you missed the signs of exhaustion and rejection at the strong resistance zone and you did not know if price action was going to turn around. Well, when price action broke below this trend zone, then that's when we would have been able to place our entry. We would have placed our entry and followed price action back to the major support zone. And you can continue to use this tool to profit both ways, whether you're trading from the resistance to the support or you're trading for the support to the resistance. Now let's show you another example. The first thing we ask ourselves is which direction price is moving from. And so now that we have identified where price is traveling from, we're going to mark up our support and resistance zones. Now notice how we mark out support and resistance zones, box and price in. And if you want to know how we draw support and resistance zones, we just look in to connect the zone with the body and then making sure that it has multiple touches. And remember, it takes 2 to higher and 3 to fire. Again, that's 2 to higher and 3 to fire. Now let's entertain that you missed the 2 to higher and 3 to fire concept. What we're going to do is go through our step-by-step process. Step number 1. We like to identify major areas where price action reacted to a key level, then reversing where the price acted as resistance and became support, or respecting the area altogether. We are able to identify these levels on higher time frames such as on the monthly and weekly. However, we like to zoom down on a daily and the hour 4 chart so we can find a precise entry. Now, since we are already on the daily, we're going to remain on this chart. Step number 2, we like to identify price action, exhaustion, and major areas of rejection. We notice with exhaustion, price action tends to lose steam while approaching these strong support and resistance levels. In simple terms, in most cases, candlesticks tends to become smaller and smaller to signal pure exhaustion. Then we look for candlesticks with long wick tails to show price action is rejecting the major support and resistance zone. Step number 3, we need to see one of these candlestick patterns at a major support and resistance area. The first pattern is a bullish or bearish engulfing candlestick. This tells us that the opposition has taken over the market and is ready to go. The second pattern is a railroad track. These candlesticks must be almost the same size. This is an immediate change in the trend. And the third pattern are one of the same that occurs at both ends of the market as well. These are known as the morning and evening star pattern. The evening star occurs at the top of a strong resistance zone, while the morning star occurs at the bottom at a strong support zone. Now, just like the previous example, let's pretend that we missed all the confirmations. We missed the major support and resistance zone. We missed price action, demonstrating exhaustion and rejection at the major support and resistance zone. And we missed the candlestick patterns that we focus on. Well, what we're going to do is we are going to use our trend zone tool. So what we're going to do is we're going to watch price action play out the current move that is currently playing. So let's take this for an example. Price action was approaching the major resistance zone. We noticed because we were able to track the move and price action was showing a small uptrend back to the resistance zone. So we used our trend zone tool to keep up with price action respecting the touches. And then we noticed that price action was demonstrating exhaustion and rejection at the major resistance zone. Then price action broke through the trend zone tool in which we were able to enter into our position. And once we were able to enter into our position, it was just managing the trade from there back to the major support zone. Now that we have gone over this example, the next thing we're going to do is reveal the one trick that increased our trading account. Now, if you are enjoying this video and you enjoy trading with a step-by-step guide, be sure to head over to our website at www.thirdoutTraders.com and enroll in our free online course today, where we will show you how to trade with a step-by-step guide. Now to reveal our trick. We do not trade every day. Most traders lose positions because they believe they should trade every day. You will notice that we do most of our charts, markups, based on the higher time frames. Now, ladies and gentlemen, we do understand that's not going to be easy for a lot of folks, but we're going to release a lot of videos that's going to teach you to trade with a step-by-step guide. Now, if you enjoyed this video, we do thank you so much for checking it out. So please like, subscribe, and hit the bell so you can get notifications when we release a video. And please leave a comment in the comment section on videos that you want to see us cover next. Again, we do want to thank you so much for checking out our content, and remember, we'll see you on the other side.